So today we're examining the chart of Rush Street Interactive, profitable gambling platform. So let's look at the chart here. The 200-day is the yellow, 30-week is the ziggy. Okay, so we're above. We see a double bottom, and it broke out of the neckline, and is holding the neckline currently. It is now approaching the previous highs. So yesterday, when I first started examining it, it was a 5% upside and breaking out, clearly going higher from the breakout point of the double bottom neckline. Now we have some resistance overhead. The order blocks are overhead. We have previous highs if we look further back, but so I took the measure move from the bottom of here to there, command. So you can see here, I took the bottom of this shoulder, the bottom here of the atom, of the double bottom, up to the neckline, approximately. I measured it from here to where the neckline is, and then I move this over here, and it takes us to this line that's way up here somehow. So what is that? Well, if we look way back here, in 2021, this was the first high that it had. In 2021, which is January 2021, highest it ever was, and before it crashed horribly. How far did it crash? Well, looks like it pretty bad. Let's see. From the all-time high, it crashed 64%. So, and it was down and bad for a while. That's just some shitty gambling website, right? Then eventually we broke out here, and it ran up, and then went high, and sold off violently. So from here, we finally broke out, regained this trend line, got above the 50-day, got above the 200-day. I mean, it didn't happen easily. It was like a bunch of back and forth. Perfect retest. Tell me trend lines don't work. Perfect retest of the trend line in the 50-day with moving averages. The red line is the 50-day. That's the point of control of volume. Perfect retest of this area. Continued higher, and then fizzled out. This is called a stage 2 uptrend. And now right here, it went to a topping pattern. It was just like basing, but not going any higher. So that was the next top, which did not reach the previous high. That's about where we are now. We just surpassed this level currently. So here we are. But last time I got to these levels, it stalled out. And it dropped. It dropped really bad. Even worse than before. Let's see. It dropped. It lost like 90% of its value. 2022. Bad. This is the opposite of what you want to see if you're trying to long something. So imagine just like buying, it got above the 50-day or whatever. Fails. Below the 30-week. Below the 200-day. So I'm not touching it. Not some shitty gambling platform. But here we go. Now it starts making a base. So this is a stage 4 downtrend. Stage 4 of the market cycle. Now here we're forming a base pattern. So we come back into the stage 1 of the market cycle. We try to get up, but we fail. And it needs more work, it needs more time. I mean, it just lost 90% of its value. Come on. So these are months going by. Once retest, gets a higher low, gets out of the basing pattern, and now we're in a stage 2 uptrend here. Stage 2. So fights with this order block up here. Look at that, wicked straight all the way up there, sold off completely. Like gapped up. It gapped up like 30%, sold off, came down, still above the 50-day. Goes all the way back gradually to where it gapped and crapped. And, sells off when it gets back. So that's like people who didn't sell immediately. They're like, oh, okay, I'm just going to get out, break even. And they're down. And here, it looks like it's about to fail. It's like, oh, we can't go any higher than this. But look at that. Look at that rounded bottom right there. And here we go. People probably capitulated. They're just like, oh, I can't take it anymore. And then, bam, gaps up. 20% again. Above that order block. Craps. Regains. And is still above the order block. And continues with the stage 2 uptrend. Massive rounded bottom. Here it's going, 20%. Sells off. So it gets back up to here. What's this line again? This is the opening price. That's the level it was when it opened. So it gets up there and it fights. It makes a head and shoulder pattern, but it never actually confirms. It never breaks the neckline, see? So we're still in a stage 2, and it's going up, it's going up, it's going up. And look at that. Here's this trend line from the second high. We're putting all these head and shoulders in, another one, but never confirms. It stays above the opening, the stock's opening price, and we consolidate at the 50. And look at that. It goes up, supports, retests, confirms. Boom, takes off. Continues at stage 2 uptrend above the 50-day. Then here we can't take it anymore. And it sells off, and it sells off fast. So be wary of that. Loses about 30% value in what, like 20 days? Yeah, about 20 days, loses 30% of its value, consolidates down here below the 30-week. So that's kind of like a mini market cycle. But if you notice the higher context, it's all about context. This is just a retest of the breakout, of the macro breakout. Look at that double bottom, double bottom. Hue EMA turns green, and stage 1 at the breakout inside of a macro rounded bottom. So what's going to happen now? Well, holds the level, goes higher, and it's continuing. Reaches resistance up here, the order blocks, of course. People selling, people breaking even, people taking profits, and then once the sellers run out, another just 33 up out of nowhere, 30%. Up 30%, and this time it's a gap and go. The other times it was a gap and crap. So we can see it opens, jiggles around, closes higher than it opens. None of these candles close below the opening or below the gap. Makes a little cup. And we're going higher. We're trying to go even higher now. What is this though? So this is the previous high. And we can't get above here. We're trying, and then, maybe there's some overall market conditions in October this year. Didn't go, yeah, well, there's a bear market, there's a bull market, there's somewhere, So yeah, this ends, consolidates, and then, a little mini rally. Consolidates, double bottom. Now we're in current times. This is October through January. Sold off again from the beginning of the year into March, and now it's breaking out. The beginning of March, it started breaking out of this line here, and now here we are today. What's going to happen next? I don't know. I am not qualified to give financial advice, but we'll go into the fundamentals here soon, or maybe I already did. We'll see how I edit it. And potentially from here, though, we could see another 20% upside. Well, I guess I was looking at this candle the other day, but it took me too long to make the video, so I'm going to look at this candle. And this one's directly at overhead resistance, so a safer entry may be wait till it gets above this order block. Another idea would be just buy it now. If it loses the 10-day, 5% loss. Now we could come back down here and contest, confirm. Could confirm the breakout, return back down here, but it doesn't have to. Does not have to do that. It also could go here. You know, another retest of the double bottom breakout neckline. Or could go up here, jiggle around and stay above the order block. Then we could see a 16% move up to the original high of January 2021. So that is my analysis for today. If you would like me to cover any other stocks, mention them in the comments, or I don't know. But I'll see you next time potentially. Thank you. I am not qualified to give financial advice. And that's my analysis on Rush Street Interactive. Thank you. Hi, I am not qualified to give financial advice. The stock is called RSI, which is confusing because RSI is also the name of a technical indicator used to analyze the relative strength index. The stock, RSI, stands for Rush Street Interactive. They run online casinos and sports betting in the US and Latin America. You may have used their app. You may have lost money on their app. Either way, Wall Street seems pretty excited about them right now. Statistically, you probably have. Online gambling losses in the US hit record highs in 2024 and 2025. The average online casino player loses more per session than their in-person counterpart, partially because the app is designed to not have a closing time. Statistically, you probably have. Americans lose over $100 billion a year to gambling. And illegal online gambling alone hit $26.8 billion in revenue in 2025, growing over 28% annually. 56% of online casino players and 67% of online slot players report multiple problem gambling behaviors. The app doesn't have a closing time. That's by design. Wall Street seems pretty excited about them right now. Those two things are related. Claim: Americans lose over $100 billion annually to gambling. Legal online gambling revenue hit $26.8 billion in 2025, up 28% year over year. 56% of online casino players report multiple problem gambling behaviors. Sources: American Gaming Association. Here's the narrative. Section 1. The casino first thing. Most online gambling companies, your DraftKings, your FanDuels, lead with sports betting. Big promotions, free bets, first bet on us, the whole thing. It's expensive. You're essentially paying someone to gamble with you and hoping they stay. RSI skips that. They lead with the casino side. Slots, table games, the stuff that's been reliably separating people from their money since before the internet existed. Why does that matter financially? Casino players cost less to acquire, spend more per session, and come back more often. A sports bettor might take the free bet, lose, feel bad about it, and leave. A slots player tends to stay. Claim. North American iGaming monthly active users grew 51% year over year in Q4 of 2025 from the Rush Street Interactive Q4 25 earnings release. 51% user growth year over year in Q4. That's the number they are hanging the whole casino first argument on. More people playing online casino games on RSI's platform than the year before. Now here's the part that actually surprised me. They started making real money. For a long time, these online gambling companies were operating at a loss. They were buying customers, spending massively on marketing, spending on promotion, spending on risk-free bets that were definitely not risk-free for them. RSI appears to have turned a corner on that claim. RSI reported full year 2025 net income of $74 million. $74 million in net income for 2025. For a company that not long ago was burning cash to grow, that's the story Wall Street likes to hear. Operational leverage, they call it. Fancy way of saying they're getting bigger without spending proportionately more money to do it. Latin America. RSI is also one of the bigger U.S. operations in Latin America, specifically Colombia and Mexico. This is important for a few reasons. Most U.S. investors want international exposure in this sector, and RSI is one of the few established players with real traction there. Claim. Latin American MAUs grew 47% year over year, reaching over 493,000 users as of early 2026. Monthly active users grew 47% year over year from the Q4 2025 earnings release. Now, it is not all smooth sailing in Latin America. Colombia has a 19% VAT on deposits, which is, to use a technical term, a lot. Colombia's 19% VAT on deposits created a headwind. RSI absorbed approximately $75 million in incremental bonusing costs in 2025 related to this. So yes, the growth is real. The friction is also real. The bull case is that RSI has figured out how to grow through that friction. Whether that's true is above my pay grade. I don't have a pay grade. This is YouTube. The 2026 guidance. In February 2026, RSI issued guidance for the full year. The numbers came in above what analysts were expecting, which caused the stock to move. Here's what they said. Claim. RSI 2026 guidance. Revenue. $1.37 billion to $1.42 billion, up 21 to 26%. Claim. RSI ended 2025 with $336 million in cash. $336 million in cash. No debt. By most accounts in the industry, people call this a fortress balance sheet. I call it not my money, but it's still impressive. The prediction market wildcard. Here's something that happened recently that you might not have seen. There's a bill moving in Congress, bipartisan, which is rare, which means both sides think it's a good idea or both sides are wrong simultaneously. That would ban prediction markets from offering contracts on sports events. Prediction markets have been eating into traditional online sports betting. If that ban passes, that's good for RSI and its competitors. The market seems to think so. Senators Schiff and Curtis introduced the bipartisan Prediction Markets Are Gambling Act, would ban CFTC registered entities from offering sports event contracts. Shares of RSI and sector peers rallied on the news. The bear case. In the spirit of fairness, I have to give you the other side. In the spirit of being a responsible channel that is explicitly not giving financial advice, the stock has had a significant run. Some analysts think it's priced for perfection. The price to earning ratio, that's price divided by earnings, it tells you roughly how expensive a stock is relative to what it makes. It is quite high compared to the broader gaming industry, and there's insider selling. Claim. Insider selling documented, including the CFO reducing holdings by 19.44% and CEO Richard Schwartz selling 247,114 shares on February 4th at $17.61 a share. Source: SEC Form 4 filings, February 2026, sec.gov. Insider selling doesn't always mean bad things. Executives sell stock for lots of reasons: diversification, taxes, buying a boat. But it is worth noting when the people who know the most about a company are also selling shares in it. Just putting that out there. So that's the RSI story as of early 2026. Casino first strategy with real user growth, legitimate profitability for the first time, Latin America explosion with some friction, strong guidance, a regulatory tailwind from the prediction market bill, and some risks baked into the valuation. Is it a good investment? I have no idea. I'm not qualified to tell you. That's literally in the name of this channel. What I will say is the underlying business narrative has actual sources behind it. I've shown you where the numbers come from. You can look them up. You probably should. Unlike me, don't look me up. I'm nobody. Disclaimer, this video is for entertainment and educational purposes only. It is not financial advice. Do your own research. Consult an actual financial professional before making investment decisions. Seriously. Rush Street Interactive. The source is highlighted as a standout performer that is showing relative strength in spades during a volatile market period. Here are the specific details provided about the stock. Daily performance and technicals. RSI gained 5% on the day of the report yesterday. It recently broke out of a double bottom pattern and is described as clearing a buy zone. Analysts also noted that a high handle or shelf has formed over the previous 2 weeks, which could have offered an earlier entry opportunity. The relative strength is really strong. The stock has shown real strength over the last few weeks. While its volume was down fractionally on the day of the gain, it was still the best volume stock in a few weeks. Business catalysts. RSI is a pure play in online casinos and sports betting. A key narrative supporting the stock is a potential move in Congress to ban prediction markets from sports betting. Since prediction markets have been eating into traditional online sports betting, such a ban would be a positive factor for RSI. Fundamental health. The stock is noted for having pretty good fundamentals and is seen as being somewhat insulated from the broader market's obsession with AI or the volatility of oil prices. RSI is a notable stock on the upside. Investors should watch to see where money is flowing, even if they are not yet comfortable jumping into a new uptrend. There's a category of app called prediction market, Kalshi, Polymarket. You may have heard of them. The pitch is they're not gambling apps, they're financial exchanges. You're not placing a bet, you're trading a contract on an outcome. The outcome is often a sports game. The loophole is this: prediction markets operate under federal jurisdiction as commodity exchanges, which means they can offer sports contracts in all 50 states, including states where sports betting is completely illegal. Traditional sportsbooks like DraftKings and FanDuel have to follow state-by-state rules. Prediction markets technically don't. Super Bowl trading volume on prediction markets surpassed $1 billion in 2026. A single March Madness winner contract already has over $100 million in volume. That's money that used to go to regulated sportsbooks, and RSI is a regulated sportsbook. So on Monday, Senators Schiff and Curtis introduced the Prediction Markets Are Gambling Act, bipartisan legislation that would prohibit any CFTC-registered entity from listing contracts that closely resemble sports bets or casino-style games. Kalshi co-founder responded by posting that it was the casino lobby hard at work, which is, in fairness, accurate. Stocks of DraftKings, Flutter, FanDuel's parents, MGM Resorts, and the sector peers all rose on the day the bill was announced. The market read it immediately, as if prediction markets get closed off, that volume has to go somewhere. RSI is somewhere. Rush Street Interactive is somewhere. Now, does the bill pass? I don't know. I'm not a legislator. I'm barely a person with a YouTube channel. The fact that it's bipartisan, that states are already winning restraining orders against Kalshi in court, and that Arizona filed criminal charges against them. Prosecutors in Arizona alleged Kalshi operated a gambling service without a license. Suggests the regulatory wind is not blowing in prediction markets' favor right now. For RSI, that's a tailwind. How much of one? Nobody knows.